Welcome back to Bloomberg Bottom Line. I'm Mark Crumpton. A government plan to help the mortgage-backed securities market has actually turned out to be a good deal for taxpayers. The Treasury Department provided financing for the $29 billion public-private investment program, also known as PPIP. Its 8 funds are reporting an average return of 36% in the year ending September 30th. That's more than triple the return of the S&P 500, which earned about 10% over the same period. And the gains are even better than from the wider TARP program, which has returned 8.2% to taxpayers over 2 years. Our next guest is here to help explain the PPIP's success. Tim Massad, the acting TARP administrator, joins us live from Washington. Mr. Massad, welcome to Bloomberg News. Good to have you on.
Good to be on. Thank you, Mark.
So the Treasury Department has made 36% on this investment in the past year. What happens to that profit?
Well, that will go to the benefit of the taxpayers and help reduce the debt. But these are very positive early returns, but it is important to remember they are very early. This program is still in its infancy. It's got 8 years to run. So while we're very encouraged, we don't want to make too much out of the early good returns.
Well, 36% is pretty impressive. What do you attribute that to?
Well, basically, these markets stopped functioning in the fall of 2008, and the securitization markets generally are very important to consumers. That's how people really get financing for not just mortgages, but for autos, for student loans, for credit cards. These markets stopped functioning, and this program has helped to restart the markets. And that's really what's important here, is that this action, along with some others, have helped make it possible for the markets that provide financing to homeowners, to small businesses, to consumers, have helped to make those markets get started again.
Mr. Massad, I assume that you're not predicting a 36% return for next year. How do you see this panning out over, say, the next 12 months?
Well, as I say, we don't make any predictions, and these are very early. A lot of the funds are actually still in the investment phase, so we're not even getting into what their particular strategies or holdings are. It's got 8 years to run. But, you know, we're very pleased with the progress so far, and I think it's part of the overall good news about TARP that you mentioned. I mean, this is a program that's been unpopular for good reason. No one liked using tax dollars to bail out banks. But nevertheless, it was a program that was necessary. It helped stop a financial panic. Yeah. And it's a program, the overall cost of which is going to be far, far lower than anyone expected.
Well, speaking of the overall TARP program, we've been hearing a lot from the administration touting its successes. But is it too early to declare mission accomplished as far as TARP is concerned?
I wouldn't declare mission accomplished, but I would say this. We're no longer in a period where we're making investments, and I think the program, along with a number of other actions, helped to break the back of the panic and stabilize the system. Our economy, however, hasn't fully recovered. We still have a lot of work to do. There's millions of people who are unemployed, a lot of people facing loss of their home. So there's a lot of work to do. But TARP was really designed just for a particular function, which was to help stabilize the system. Right. And I think it did work at that, and as I say, the cost of it will be far less than people expected.
Why hasn't the TARP program then succeeded in specifically one area, and that's to reduce the tide of home foreclosures that are sweeping the country?
Well, I think it has had a very, very positive impact on that problem. We've been able to not only help 500,000 people get permanent modifications directly, but the program has actually helped set an industry standard. When the Obama administration came into office, we faced the worst housing crisis in decades, and really nothing had been done to respond to this.
Right.
And the program we did under TARP, which is called HAMP, was part of a series of actions that the federal government took, including trying to keep mortgage rates low. And I think those are helping. We're still, however, in a period where we're still working to stabilize the market and fully get out of this recession.
Mr. Massad, speaking of housing, are Fannie Mae and Freddie Mac ever going to become stable enough that they won't need government support from the American taxpayer? And are the mortgage lenders ever going to be able to repay the federal funds that they received?
Well, as you know, the Treasury Department is working on a proposal for reform of the GSEs, and that will come out at the end of January. So I'd rather not speculate on what that will be. But I think, you know, the administration is committed to continuing to take a variety of actions to try to stabilize this housing market and help avoid preventable foreclosures.
Mr. Massad, in our last minute, as you know, one of the topics still prompting public outrage was that bailout of AIG, about $185 million in TARP money. Is all of that money ever going to be returned?
Yes, actually, we're very optimistic that we will get all of our money back and potentially make a profit. We've recently entered into a restructuring agreement. It's still subject to conditions, but if that closes, we would expect to actually make a profit on the AIG investment.
All right, Tim Massad, Acting TARP Administrator, joining us live from Washington today. Mr. Massad, thank you so much for joining us on Bloomberg News. We appreciate it.
Thank you for having me.